Welcome to the Contrarian Capitalist podcast. Happy 2025. I'm delighted to be joined today by Gary Savage, the president of the Smart Money Tracker Investing newsletter and an advocate for the return of common sense to a world that is badly in need of it. Gary, how are you?
I'm doing good. Thanks, Rob.
Really looking forward to this because we're going to talk about gold, talk about silver, possibly look at some of the main indices as well. And it'd be very good to get your thoughts and your experiences. Let's start with gold, and I'm sure you've got some charts to show us as well. What are you seeing at the moment, and what do you think a likely direction is for gold?
Well, as we discussed before we started this, gold is in the advancing phase of a new 8-year cycle. It's only 2 years into that, so I don't think we should expect any kind of major top. Now we'll get intermediate tops like we did whenever that was, November. We'll get those from time to time, um, and the those kind of corrections usually last 2 months, something like that. It looks to me like gold is probably in a triangle consolidation. Silver and miners have corrected. They've had a normal ABC correction. Um, we got, I predicted this would happen. The banking cartel would try and paint the yearly picture in silver, try and close it for the year below $30. It's kind of hoping they would fail. If they failed, that would potentially start the short squeeze in silver. They have not been able to hold it below that. It's back above it today. So that potential short squeeze could occur anytime now. We kind of defeated the cartel in gold back in March when they couldn't close it back below 2000. That resulted in a short squeeze that sent gold $800 higher. Same thing's going to happen when they lose control of the suppression in the silver market. We'll have a short squeeze, probably be more violent than gold. That doesn't mean it's going to go up $800, but I certainly think we're probably going to see $50 this year, maybe a little above that. But we haven't, I can't say definitively that we've broken the suppression yet. I think we're going to have to get above probably $32 or $33 before the shorts start being forced to cover. Mining stocks, I don't care for mining stocks. I know a lot of people seem intent on investing in those. I will occasionally take a trade in the ETFs, GDX, or maybe GDXJ, but it's just somewhat short-term trades. The mining stocks are going to be the last to break the suppression. Newmont is a perfect example of why I don't trade individual. I don't trade individual stocks, period, in anything for those reasons. But Newmont is an example of why I don't trade the individual mining stocks. That attack on their earnings report, it was a focused attack on the bellwether mining stock, and it just kind of started the whole sector rolling downhill. So it's going to be longer before the mining stocks break this suppression. Gold has already broke it. Silver, I think, is in the process of breaking. But until I see some evidence that the mining stocks are ready to break free of this, then I'm kind of just maybe a short-term trader. If I think that we've got a bottom and maybe the potential for a move out of a bottom, I may take a few days to a few weeks trade in GDX, but it's not something I'm going to hold long term. Long term holdings, without question, is going to be gold and silver, and I think silver will. I think it's going to outperform the miners anyway. By the time we get to the top of the bull market, now certainly there will be an individual mining stock here and there that will outperform, but I think if you compare the GDX ETF or the HUI or XAU, when we get to the final top 2, 3, 4 years from now, I think silver will have outperformed the miners. So I would rather just be in the silver. There's no company specific risk. You don't have a CFO committing fraud, or you don't have mine floods with silver, or country nationalization, and you just don't have any of those kind of worries with the actual commodity. So I prefer silver above everything else, and then gold I would diversify some into gold, like maybe GLD or just physical gold. Physical gold and silver is where I have most of my money. Easy to weather the ups and downs in physical gold and silver, and the attacks doesn't bother you a bit when you're in physical.
It's good that you say that because speaking to other people, I know from personal experience myself that when you hold physical bullion, I tend not to really pay much attention to prices or movements or anything like that because it's there, it's stored. The plan on physical bullion is so long term that I just don't think about it. But then when you're trying to trade it and make some cash that way, of course it's a complete different mindset that's needed. And I noted a post that you put on X, I think it was at the end of December, and it was basically saying that people do the wrong things at the wrong, traders do the wrong things at the wrong time for a multitude of reasons. I just wondering if you can just go do a bit more of a deep dive on that for me, please, Gary.
So in general, most traders they get emotions are your worst enemy in this business. And so when something's been going down for a long time, people become very bearish, and they can't envision any scenario where price can turn and go back up. It looks bearish, and every bottom is going to look bearish. They're not going to ring a bell for you. Well, they may actually ring a bell, but the signs are subtle. You got to know what to look for. So generally what happens is people are panic selling at bottoms when they should be panic buying. And then the same thing at tops, it doesn't look like there's any way that price can turn and go back down and correct. But that's when you should be selling and taking profits. And in metals, one of the most difficult markets. It's just an erratic, volatile market anyway, because it's a thin market. And then on top of that, you've got the banking cartel that's manipulating the market, trying to and doing a very good job of making pretty much like almost no risk gains on the short side, and then they know when they're going to cover and allow the market to go up, and so generally you'll get these attacks and that will mess with people's emotions, and you tend to uh, panic sell when you get one of these attacks. So I have given my subscribers a strategy to use. Of course, one of them is just to own a whole lot of physical. The cartel is not going to knock you out of your physical, and you'll be there for the whole run, no matter what the market does. All the up and down gyrations won't bother you. But then I've given my subscribers a leveraged trading strategy that will, if you can stay focused and disciplined, will allow you to make some leveraged money off of this market, even though it is probably the hardest market in the world to trade successfully.
So not that I one for overly date stamping things. I mean, we're recording this on Monday the 6th of January. Podcast is out on Tuesday the 7th. So I'm hoping any prices we discussed aren't wildly changing between now and then. But if we're saying that, I think at the moment when I last looked, silver around about $30. I think it was around about 30. A bit of an up and down day. You might have the chart in front of you. Um, so if we're looking at that as it is at the moment, and then with breaking patterns and cup and handles and so forth. From what you're seeing, do you think that there is a potential for a little bit more downside, maybe to, I don't know, 26, 27? Because I see a lot of people say that and then up, or are you of the opposite opinion and we're sort of waiting to just go up?
I'll share the chart here in just a second, but no, I don't think we're going to 26, and I'll explain why and show it on the chart here in a minute. But again, this comes back to the fact that we're in the advancing phase of a new 8-year cycle. We're only 2 years into this cycle, so we really shouldn't be making lower lows of an intermediate or a yearly degree. So let me put the silver chart up here. Go. All right. Can you see that?
Yep, that is clear. Yep.
Move that window aside. Okay, so $30. Let me see if I can expand this a little bit. $30 is was a major resistance and support zone. Tested it twice here, tested it again here. broke above it. The problem with this breakout, and this is one of my rules that it's one of the first things I teach my subscribers, breakouts that occur late in a cycle don't generally produce sustained moves. Those tend to be false breakouts. You need a breakout to occur early in a cycle if you want to expect a sustained move. So you can see our intermediate advance began here. And so we got the breakout, but it was really late in this intermediate cycle, too late for a sustained move. So then silver gets driven back below this $30 support and resistance zone, tries a couple more times to get above it, and then we drop back below it again. And then this is our intermediate cycle low. We should not be going back below that. So people that are calling for a retest or a move to 26, I don't think it's going to happen. If we were in the declining phase of an 8-year cycle, absolutely, we're going below it. But we're not. We're only 2 years into the advancing phase of a new 8-year cycle. And I don't think any 8-year cycle has topped prior to 4 years. And in a bull market, which we are in, it's usually going to be 6 years before the larger 8-year cycle tops. And then when that happens, then you'll start getting lower yearly lows. And so here was our yearly cycle low for 2022. And here was our yearly cycle low for 2023. We're just in the advancing phase of an 8-year cycle. We're not going to go below those. And we shouldn't be going below the intermediate cycle lows either. Now, I will add the caveat that silver is a very thin market and it can do some strange stuff. So, it's not out of the realm of possibility, but I would say maybe you might have a 5% possibility that could drop below that. And it would take some extreme banking cartel suppression to do that. It's not going to do it naturally. I think you can see we're fighting right here to break this year-end suppression, to paint that yearly chart below $30. We're fighting to defeat that right now. I tend to think we're going to. I think, and this is our intermediate cycle low now. So if we break this suppression and we hold 30 and we come up here and test this quickly, then that will be a breakout that is early in an intermediate cycle. And that gives us the opportunity for silver to make a big run to, I think we're going to make, I think $40 is a piece of cake this year. 45 is likely, and I don't think $50 is out of the question, especially if we break this cartel suppression. That's going to trigger a short squeeze just like it did in gold. So, we're just watching this closely right now for signs that it's breaking that banking cartel suppression. As long as it holds above $30, we're good.
And that's good to know, and it's good to see the charts. So thank you for sharing that. So the other caveat that is a possibility, and again, I'm just sort of trying to link the major indices into this as well, is that there are not rumors, but people out there say, well, hang on a minute. Obviously, Trump inauguration is coming up. Obviously, debt, US debt's very high, worldwide debt's very high. Maybe some hot wars, etc. There could be. I'm not going to say a market apocalypse because that's being too dramatic, but there could be a significant correction in the major indices. If that happens, would that then have a negative impact on the metals, albeit probably very briefly before they then head off to the moon? What are your thoughts on that?
Well, they're two separate markets with, completely different fundamentals. Generally speaking, no, they do their own thing. And an intermediate or yearly cycle low in the stock market doesn't necessarily have to drag down the metals. Now there is a larger degree cycle in the stock market that tends to drag everything down with it, and that's a 4-year cycle low. That's what we had in 2020. It was a 4-year cycle low in the stock market, and that selling pressure was extreme enough to take everything down with it. The thing is that's not really due in the stock market till 2027, and rather than to expect some kind of crash right now, I think the odds are better that we might get some kind of a parabolic blow off top. This bull market's getting pretty mature. What are we, 14 years into, 15 years into this? So most bull markets end in some kind of a bubble, when everybody finally catches on, hey, there's money to be made here, and my neighbor's making money and I want to make money, so I'm going to start plowing money into stocks or Bitcoin or whatever it is. And you get that parabolic move, and usually what is happening is the fundamentals are deteriorating as that bubble phase continues, and that's setting the stage for the crash, because things that go straight up also go straight down. So rather than a crash, and considering that the 4-year cycle low is probably not due until 2027 in the stock market, I tend to think we may get some kind of a bubble parabolic top in the stock market, and then kind of a long, slow grind down into that 2027 4-year cycle low. It'll be coincide with a recession. So my guess is we probably got 6 months to a year maybe for the stock market to continue, and then the signs that the economy is rolling over to recession, they're a little bit subtle right now. I think they'll start to get a little stronger as we go along, a little more difficult to ignore, and then at some point that'll put the top in, and then we'll start that grind down, and the Fed will fight it the whole way down, and that'll be good for gold. They'll do QE and they'll print money, and that'll probably slow down the decline in the stock market. It'll be erratic with lots of rallies, but in the meantime, I think that'll be very good for commodities. They'll ignite the second phase of the commodity bull market.
That's also good to hear, because it's good to have someone that's got a bit more of a positive outlook, because when I sort of have a look around, it seems to be quite a bit of caution out there, which is understandable if you're trading, and then also seems to be quite a bit of doom and gloom. So be able to have you on and say, well, hang on a minute, this is where we are, this is what's going on, and this is what you're seeing. That's also very beneficial. I was wondering, just for people that are actually watching this on YouTube or Substack, wherever they're watching it, I was wondering if you can pop up that gold chart just to show that break of that cup and handle, if that's okay, just to really give that visual for people so they can see what potentially lies ahead.
Give me just a second here. All right, can you see that?
Yep, that is wonderful, thank you.
All right, so the rule is the bigger the base, the higher in space. This is, what is this, a 14 year base. You got it's pretty well defined cup and handle. Here was that 8-year cycle low that I was talking about. And so like I said, we're only 2 years into this 8-year cycle. Here was our last 8-year cycle coming out of that 2009 bottom. This was also the crash in the stock market. And this is, you can see we had a fairly large base right here, and you can see the power of that breakout from that, whatever that was, a 1.5 to 2 year base. Huge move. This base is many times bigger than that one. And this is why I'm on record. $100 silver is going to be a piece of cake. Now, a piece of cake doesn't mean it's going to be an easy path to get there. I'm just saying it's going to get and 250 is likely in silver, and $500 isn't out of the question. Gold, 7,000 is a piece of cake, and I think 10,000 is probably likely, based mostly on the size of this basing pattern, the number of years that gold remained in this basing pattern. You can see we've got the initial liftoff. This is where the banking cartel suppression collapsed. They were unable to drive gold back below 2,000, and that ignited this massive short squeeze. right now, I think this could still go either way. You can see the banks are trying to hold gold below the 50-day moving average. I don't know if they're going to succeed. I think gold is in a triangle, and that would be kind of consistent with the suppression breaking in the gold market. Instead of getting a normal kind of a deep intermediate degree pullback, we're getting these sideways consolidations. You can see we had one here, and then if I widen the chart out a little bit, we had a big one here. So we're not getting those kind of a deep intermediate corrections that we would normally get in metals or in gold. And I think that's because the suppression has broken in the gold market. So we're getting, we're just making up for lost time for all those years that gold was suppressed. Now, when we're in the timing band for an intermediate decline, we're not really getting the decline. We're getting these sideways turns. So we had a big one here, and we also had one back down here as well. We had one here, and now we're in the timing band. We're in an intermediate decline, but it looks to me like we're forming as a triangle, another one of these sideways consolidations rather than a deep intermediate correction. Still remains to be seen. Maybe they could, pull off a successful suppression or an attack in the pre-market and break this trend line, because they certainly see this just like I do and a lot of other people. We see this triangle, and if they've got shorts that they're wanting to protect, they want to try and break this triangle, because that'll probably cause everybody that's banking on the triangle to panic sell, and that would allow them to get out of their shorts. And it would turn this into, instead of a triangle, it would turn this into an A, B, C decline. And that's what we got with miners and silver. I'll pull those charts up. So this is normal. This is normally what happens during an intermediate decline. You get an A wave down, you get a B wave bounce, then you get a C wave that makes a lower low. Both miners and silver did that. They completed ABC moves. Gold has broken the suppression, so it's been more sideways consolidations instead of normal intermediate corrections.
Yeah, the charts are quite compelling, I have to say. So the minute, again, just going back to that gold there, so although there is the ability for that to sort of go down a little bit more because the banking cartel suppression's been broken, going back to that triangle that you had on there a second ago, the minute that almost breaks that triangle, I don't like saying it's a case of onwards and upwards, but certainly the market signals are quite favorable, shall we say.
Yeah, it doesn't matter if they break it or not. It would just turn the intermediate correction into an ABC move rather than a triangle consolidation. But it's not going to change. It's not going to change the fact that we're only 2 years into the advancing phase of a new 8-year cycle. It would just postpone the bottom a little bit and probably make the rally even more powerful. You can clear sentiment one of two ways. You can either have a sharp correction that gets everybody bearish, and everybody can only see, price going down for the foreseeable future. That's the fuel for a big move up. Or you can go sideways, and that creates frustration. People are just, they're just sick of waiting. They want it to happen now. And when it doesn't happen as quick as they want it to, then they give up and they sell and they go looking somewhere else to buy. And generally what happens is, these novice traders, they'll go chase something that's been going up for 8 months. I saw them do that in uranium. It had a big move, and I saw people wanting to chase uranium a couple of years ago, and I warned people. I said, I think uranium's probably going to either pull back or churn for a considerable amount of time. And so I don't think this is the market you want to go into. And of course, everybody told me at the time, there's some fundamental reason why uranium can't go down. Well, it's been 2 years now and uranium went down. So that is a mistake that a lot of people make, is when we get in these sideways consolidations, they get frustrated. They go looking for something else to trade where they can make money, right now. They need to make money today. And generally they jump on something that's already been trending up for a long time. So they jump in at or very near a top, and then it starts to correct, and then they panic sell for a loss. So they just over and over, they buy high and they sell low, and it's just how you lose money. It's how you lose money in a bull market. You buy high and you sell low. It's tough to buy low at bottoms or in sideways consolidations. It doesn't look like the metals are ever going to go up again. They are, because we're in the advancing phase of an 8-year cycle. So they will go up. And if you've got the determination and the focus to stick with the trade, you will be rewarded. But it takes being able to ignore that, maybe Bitcoin or the stock market is going up right now. So what? I don't care. I want to make sure I have more money in my portfolio at the end of the year. And the way to do that is to get in close to or at an intermediate bottom and then hang on. And if you do that, you will make good money year after year in your portfolio.
Yeah, and I'm certainly looking for. I don't profess to be anything like an expert in trading or even had the years of experience that you do, but I know from even just looking at what you post on X, and I will put links into everything in the Substack post as well. But just by looking at what you've said and looking at some of the charts and the information you share, I've been able to take a very similar approach where I've got in at a price that seems sensible, and then looking at all this analysis, I'm happy to ride that trade out as such, because like you said, the frustration is going to annoy people, or there might be a couple of dollars down and it flushes a few people out. Whereas I look at the other fundamentals as well, just like you do, and go, well, really it should really be going up. And that's what will happen. Gary, just to wrap up, obviously we looked at gold, we looked at silver, briefly touched on the main indices, and you've explained a couple of big cycles there, which is useful. Any other markets you touched on? Uranium there, natural gas, oil, any other markets, any other information you think is useful to share at the moment?
Oil is forming a large base as well. I'm not sure it's ready to break out. I think $200 oil is going to be a piece of cake, but it's going to be several years away. It's forming a large base right now, but it may have some more of that base to form before we're ready. Bitcoin has also broken out of a cup and handle pattern, but it's not nearly as large as the one in gold. So I don't know that it's more positive. It doesn't have the same potential that gold does. But I'm bullish on Bitcoin right now because it's broken out of that handle. My kind of initial target area would be maybe $120 to $130 or $130,000. And then I think we're going to see an intermediate degree correction. So this intermediate cycle is getting pretty mature in Bitcoin. You're kind of starting to play musical chairs a little bit with the Bitcoin market. So you want to be careful not to hang on too long and then get caught when that intermediate correction begins. That's where you would really want to buy Bitcoin, is during that next intermediate correction. If you're buying Bitcoin right now, I would I think we're back above 100,000. I think I just put a hard stop below 100,000 on Bitcoin. And if it goes back below that, then it probably means the intermediate correction has begun, and you need to just kind of be patient, wait for 4 to 8 weeks, and then try again at an intermediate bottom. So the two markets I'm most bullish on are obviously silver, more than anything, in any market, anywhere, silver. Most undervalued commodity on the planet. Gold and silver, most bullish. Bitcoin, definitely bullish. Stock market, probably bullish, but getting pretty late in the bull market. 15 years is pretty mature bull market, so you need to be a bit careful with stocks. If we do start an obvious parabolic, bubble type move into a top, then at some point control greed and just say, hey, I made enough money. I'm going to take my profits and not get caught when the crash comes.
Perfect. I think that's a great way to to sum that up. So thank you for summing that up. Gary, I always like to get people to let them know where people can find you. So where can people find you if they want to get hold of you and follow your services?
They can just Google Smart Money Tracker. That'll get you to the blog, and then there's links on the blog. It probably take you to the premium site as well. I'm on X as Gary Savage 1. You can follow me there. Now I will put a caveat on there. I'm kind of changing the service to more just experienced traders, people that have the focus and the determination to ride the rest of the bull market, that aren't just looking to make a quick buck, jumping back and forth from one market to another. So um, I still have the monthly subscription available in January and February, but by the end of February, the S&T is just going to convert over to a yearly subscription, and it's really only going to be directed towards serious subscriber or serious traders that are interested in riding the last 2 to 4 years of this bull market in the precious metals, with a bit of, I'll still do a bit of analysis on the stock market and Bitcoin and energy, but my main focus is going to be metals, because I think that's where you're going to make the most money in the next 4 years.
Absolutely. I completely agree with that sentiment. And I will put links to excellent and websites on the Substack post as well. Gary, it'd be, if you're happy, it'd be great to maybe touch base later on in 2025 just to see where we are, if that's okay with you. And thank you for your time and have a fantastic day.
Sure, sounds good. Thanks for having me on, Rob.